Okay, I have always been wanting to do this topic because it's a very common question asked to me, and the interesting part is my wife is actually an insurance agent, so this is why I'm talking about this topic. And no, this is not why I'm talking about this topic. As in, this is why I am able to share this topic because my wife is an insurance agent so sometimes if I think wrongly, I'll ask her. Then we will have a debate who is correct. Okay, so anyway, I'm not trying to sell anything, and I'm not an insurance agent, and I'm just going to share what I bought, okay? Because like I think there's 3 or 4 basic insurance that is really very interesting and really very helpful to us, okay? I think the first one is a shoe plan. I think if Prudential is called Pru Shoe, I don't know what shoe they call, okay? Because my wife is from Prudential, so I'm not able to like understand the others. Like they always have terms, but they are the same, okay? They are more or less the same. There's only 1 or 2 differences and everything. Okay, this shoe plan you have to buy very early. It's like a hospitalization plan. Why I say buy early? Because like my dad is very old now. So my dad is like 60 over years old. Not very old lah, but my dad is 60 over years old. Still very healthy. But because my dad has like maybe some I don't know what he has gout or something, yeah. So when he bought it in last time when he bought the insurance with N_T_U_C, this shoe plan, he don't have gout. So when he don't have gout, right, he still get cover for gout. But later in the midst that, let's say today he want to change his plan to Prudential will not cover him for gout. So this plan you have to buy very early. You buy early so that it covers everything. You don't wait until you have a problem then you buy. Then they will tell you, hey, it doesn't cover this thing. Okay, so I think it works that way lah. So this one I really recommend everybody to buy early, and you pay by your CPF. The cash portion you pay, right, is because if I'm not wrong, okay, correct me because I'm not an insurance agent, so my facts may not be correct. I'm just sharing with you with my basic knowledge. There's like you have to pay your first 1,000 or 1,500 or first 500 or whatever. So if you pay a cash portion, then it will cover the first portion of 1,500. But you don't pay the cash portion, then you have to pay the first 1,500, then the rest is being covered using the CPF. So this shoe plan you actually pay CPF, using CPF to pay yearly or monthly. I think, yeah. Then there's you can check your insurance agent. Okay, I'm just trying to tell you why is it useful. This is a hospitalization plan. Use CPF to pay, then you can top up using the cash so that you can cover the first 1,500 or 1,000. Okay, so shoe plan I think is very important and to buy early. So because like my dad, right, he cannot change now. He can only stick with the first agency that he bought. Okay, number two I think is interesting is a mortgage. Okay, so we'll talk about property again, but there's a reason, to me I feel that like you have to buy a mortgage insurance because you buy a property, right? Let's say you buy a property at like 1 million, your loan is like 700,000. Then you buy a mortgage insurance to cover this 700,000. Then anything happen, right? At least you don't leave your family paying a high this installment It's to them it's like a savings plan or a life plan given to them. Because once anything happen to you, right, the house is being fully paid up by this mortgage insurance. Of course, you buy 100%. So this is very useful because it helps you. Actually, you don't need to buy a life insurance already. I mean, in my opinion, because the property you buy 1 million, loan 700, then there's a mortgage insurance that cover this amount 700,000. But the property will still keep inflating, keep appreciating, keep increase in value. Let's say it become 1.3. If it become 1.3, your mortgage insurance amount don't change, but you're still getting out of. Instead of the 1 million that you initially paid, you're getting 1.3. So actually you can use a property to cover you in that manner, just to pay the mortgage insurance. Then the loan, anything happen, the loan pay off. So can you imagine today you buy a 1 million property, you buy a mortgage insurance on 700,000 because you already paid a 300,000 down payment. Anything happen, the 700,000 get paid off. But today you go and sell the property in the market, it's 1.2 million, it's 1.3 million. So your family get back more than what is expected instead of getting it back 1 million. Okay, so this is, I think, is very useful. So this is a must buy for everybody. 3, I think the early stage critical illness is important because if you get critical illness, right, then it's going to be a big problem. It's going to be devastating and mind blowing, and like you will feel very negative and all these things. So you really need that kind of money at the start. You see, why I say early stage critical illness, if I'm not wrong, there's a critical illness and an early stage critical illness. Early stage critical illness, right, means you buy already, then at the early stage of the discovery of the critical illness, you get to claim. But critical illness, right, at the early stage, I don't think you get to claim. Something like that. I think that's the difference. And why I say it's worth it, you see, I'm a very niao person. Niao person meaning that I care about money a lot. I don't anyhow spend. You know. So why I say this is worth it, because if I'm not wrong, if every month I pay this early stage critical illness, let's say 200,000, let's say my plan is 200,000, but cover me, let's say 600,000, meaning I pay 200,000, cover me 600,000. Example, if let's say I never kena critical illness, touch wood, damn lucky, must find some wood. No, here, it should be wood. Okay, so if I very lucky, I never kena critical illness, I still get back 200,000. Never inflate, never deflate, never mind. I still get back around there. Deflate a bit also never mind. To me, it's like a savings plan. 买一个安心. But unlike some other plans, I lose money But this plan I don't lose. If I don't get critical illness, I still get back whatever that I paid every month. So I think it's very useful. Okay. Number 4. Accident plan. Okay, accident plan, I think there's a few. Okay, the one I buy doesn't cover dengue and food poisoning. So there's some that covers dengue and food poisoning. The one that I buy, I think the medical coverage is higher. That's why it doesn't cover medical food poisoning and dengue. Okay, so this one is an accident plan. For me, I think I paid 1 year about $200 plus minus. Why is this useful? This one I go and play basketball, play soccer. Wow, sprain my leg. I go see TCM, can claim. I play basketball, then I kena cut here, then I went to sew it up. I claimed 3,000. Then, basketball is a very dangerous sport. Come to think about it, all claim with basketball. Okay, so if you go and play sports or whatever, you get injured, you got into an accident or whatever, you can claim for medical, even like TC and everything. 2 weeks ago, I got food poisoning, then I called, I couldn't claim. But I know there's plans that can claim, but the medical coverage is lower. Instead of 3,000, it's 2,000, something like that. That's for me. I don't know, you have to check your agent. So, I think this is useful because for a small amount of money, you get to claim something that is common. To me, I'm a very sporty person. Is it right to say yourself that you're sporty? Okay, never mind. Anyway, I play sports almost every week. So if I get injured, right, I will like to claim. If it's too serious, then it's better that this $200 cover me. If I claim more than $200, then it's a good thing you know. If it's good thing in terms of maybe I fully utilize the plan, that kind of thing. So it's not very expensive. It's cheap. It's a yearly thing. Yearly $200 cover you TCM, cover you operation, surgery, all this. Of course, to a certain amount, but it's really worth it. It's definitely more than 200. I think my medical coverage and I claimed my eyes was 3,000. So I think this is one of the better plans. Okay, when I say better, I do a lot of calculation. I do a lot of calculation to ensure that I don't lose money. Okay, so I shall not rant more. And if you like this topic, hit the share button. Subscribe to my channel. Like my video. I hope something about insurance interests you instead of just keep talking about property. And I see you again. Bye bye.